Hello, today we're going to be discussing the Friday, June 6, 2025 session of the S&P 500 Index, the SPX, and trading options utilizing the Day Trading GPS S&P 500 SPX Index Daily Key Levels Indicator. So we have up on the chart a 2-minute chart for the SPX CBOE Index for the Friday session. As you can see, here we have the 9:30 marked off here. This is the session open. As you can see in this session, we gapped above. We had a large gap up today, and the open we gapped above the bull bear KPL for today for XPX, which was 59.7834. So we have the main levels here. R1 through R3, along with the bull bear KPL, and then S1 through S3. And then we also have the optional midpoint levels also enabled on the indicator as well. Okay, so the session, as we said, started off with a huge gap up. It did gap above the bull bear KPL. If you were so inclined, you could have taken a call option here right off the bat for a play up to the next level. Here, that's not what I would have done in this particular session, just simply because of what was going on in the news this week with Musk and Trump and all the uncertainty that was going on. It's really just better to sort of wait and see if we're going to get a return back to the bull bear key price level. Some days, if we have a gap and go, like I said, you can either take a stab at a call option right off the bat, because there will be some days where it will just gap and keep going up for the rest of the day and just be a complete trending up day. Those happen maybe about 5% of the time or less, so the odds don't really favor. There wasn't really any outstanding news that would other than we had some news at 8:30, but it really wasn't something that was some kind of blockbuster positive news that you would think that would have just a complete trending day with no retrace. So the play here is to see if the price will return back to the bull bear key price level, and then what it does once it does that. Will it bounce off of it and resume the upward momentum, or will it change course, go and fill the gap down here at least, and start closing below the bull bear key price level? So in this particular session, we're waiting to see what happens, and later on in the session at 12:56 p.m. price did return right back down to the bull bear key price level after surging up to the R2 level earlier in the session and then retesting it here around 11:06 to 11:08. And when we finally got a move back up here after moving back down to the midpoint, and then we had a sell-off back down to the bull bear key price level. Now if we take a look at the data window here, you'll see that on these two bars here, this down move here, the low was 59.7932, but on the next bar here, 59.7863. So that is basically 29 cents above the bull bear key price level for today. Was the low of this candle and the low of the session. So we have a touch and move, or almost a touch, but moving back up and closing above the level here. And as you can see, we have from 1256 to about 110 to 112. We have this range right here where you could have entered on a 5980 0DTE call. So you had a window of time here. I probably would have recommended just entering right here on this candle here. But if you missed that candle, you certainly had another almost 15 minutes to get in here. And then your stop loss is going to be a quarter level below the bull bear key price level for the day. If you wanted a more liberal stop than that, then you could go ahead and make it the midpoint between the BBKPL and S1. But considering the possibility of, if it starts reversing and we could get the possibility of a gap fill here, you would want to be out fairly early out of that if this proves to be wrong. So the most prudent thing to do here is a quarter level below as your stop loss. But again, every trader's different. Some traders like to have more liberal stop loss, but the most prudent stop loss here would be a quarter level below the bull bear key price level. And that way, if you end up being wrong, the loss is not going to be that much, and you can always re-enter again once we see what was going to be resolved, if that was the case that it did break below here and hit your stop loss. In this case, though, it did not break it did not come close. It did not even come close to hitting the bull bear key price level after making this move here, this almost touch here by 29 cents, being the low right above the bull bear key price level. And those call options during that window of time could be bought from anywhere from $10.40 up to $13.50. So we'll go to the Thinkorswim chart here of the option here in just a minute, so you can see that along with the timestamps. So after entering here, you have a move up to R1 here. Generally, we would be looking for a move back up to R2, since that's where it did spend a lot of time earlier in the session. However, your first take profit level here would be the R1, and at the R1 level, the 5980 call option was 1848 at 1:30 p.m. when it hits the R1 level right here. So depending on where you bought, from 1040 to 1350, in the worst case scenario, you paid 1350, you have a $500 profit per contract. If you paid less than that, or as little as 1040, then you had as much as an $800 profit per contract. As you can see here at 2 p.m., we hit the mid R1, R2 level of 6,340 cents. At that time, the 5980 call option was $25.75, and your profit per contract is $1,200 to $1,500 per contract at this level. Again, depending on where you bought at. So if you bought at the worst case scenario, $13.50 here, it's now $25.75, and your profit's going to be $1,200. If you bought a little bit better, or at the low of $10.40, then it would be as much as $1,500. And as you can see later on in the session, 2:32 p.m., SPX does hit the R2 level again, returning back up to where it was earlier in the session, and that's 6,011.75, and the 5980 call option is now $35.02 here. So your profit is $2,150 to $2,400 per contract. Again, if you took the worst case scenario here, from this, it's $2,150 per contract. If you bought at a better price within this range here, you would be up to $2,400 per contract. So keep in mind that generally we're looking for at least one level move up before we start taking profits. So here on this entry here, if you took the entry at this close here, this very close to the, if you took it down here closer to the bull bear key price level, then the one level move would be R1. If you took it here at the close or somewhere in this range here, this is close to the mid BBKPL R1. So you'd be looking for at least a move to the next midpoint, which would be mid R1, R2. So this would be your exit here, either here or here, depending on where you bought down here, as the one level move up, and closing out 100% of the contracts. If you are the kind of trader that likes to trade multiple contracts and take profits on the majority of the contracts at using level-to-level trading, and then leave a risk-free runner after locking in profits and adjust your stop loss on the remaining runner, then either here or here you could have taken at least 50 to 75% off. It's usually better to go more in the 2/3 to 3/4 range. I mean, at the very least 50% off, but in most cases, at least in my opinion, it's best to, if you're trading multiple contracts, so you have 3, then you would take 2 off. That's 2/3. If you had 5 contracts, then you'd either want to take 3 or 4 off. If you had 10 contracts, then you would want to take somewhere between 6 and 8 off, just to give you an idea. So it really just depends on how many contracts you're trading. If you're the kind of trader that's only trading one contract, then then there is no opportunity to do that. So you're just going to exit 100%. So it really just depends the kind of trader you are. If you want to see if we could possibly get a break, even more of a break up later in the day. However, you do need to keep in mind that this is not happening earlier in the session. This is happening in entry starting almost at 1 o'clock, and then these exits here, you have 1:30 and 2, and the SPX index closes at 4 p.m. So with most brokers, especially including Thinkorswim, you have to be either out of the contracts before 4 p.m. or if you hold on to the contracts, if you're profitable going into the close on SPX, unlike SPY at SPX at 4 p.m., you can simply hold on to the contract, and since they're cash contracts, then you will be paid the difference between the strike price and the closing price of SPX in your account the next business day. So that's one advantage of SPX for those people that like to hold into the close, is that unlike trading other types of options like SPY options, where there's a risk of assignment, with SPX there is no assignment risk. It's just simply cash settled, so you can simply let it go into the close if you're so inclined. I generally don't recommend doing that, and don't do it myself unless it happens to be a runner and not the main contracts I've been trading. So if I have a risk-free runner and I just want to see what happens into the close, sometimes you can get some spikes at the end of the day. Here we didn't really do that. We just sort of trailed off and ended around the mid-level or just under it. So if you are the kind of trader that does like to do that, and you are going to get out of, say, 60 to 80% of your contracts and leave a risk-free runner, if you did that down here, then you would at least want to move your stop loss back to break even. So you would want to move the stop loss back up to where your entry was. If your entry was here, then you might as well just make it the mid BBKPLR1. If you got closer to here, then you would either want to make it the bull bear key price level or say a quarter level above. But the whole idea with runners is that you're taking profits. So let's just say, as an example, you had 10 contracts that you bought for $13.50. So that's $13,500. And let's say you got out up here and you wanted to get rid of, say, you had 10, let's say you got rid of 8. So 8 up here at $25.75. That's about $20,600 getting out of 8 of them. So that's a very nice profit for you to lock in here. That's like $6,000 or $7,000 worth of profit. Then you've got 2 contracts remaining that you could adjust the stop on. If you're more inclined that you want to keep a tight stop on it, then you could just instead of going back to where the entry was, then you could just make it one of these levels here, if you just wanted to not take the chance of it falling back all the way down to your entry place, or just right about your entry place. Then you could just adjust your stop loss to say R1. But so if you trade enough contracts where you can leave risk-free runners, then you can do that. At the end of the day here, where they closed out, this closed out at about almost around 6,000. So if you had 5980s, and those would have been worth about 20 at the end of the day, and you still would have had a nice profit on the runners at the end of the session. If you're not going to do the runners, like I said, you just get out 100% either here or here. Alright, so now let's take a look at the thinkorswim. So again, Friday, June 6, 2025 trading session. I've marked off here the levels from 1040 to 1350. This is the where the entry would have been, or at least the initial entry consideration. Here on this bar, we're at 1256, where it came down 29 cents short of the BBKPL and then closed back above. As you can see here, I have 1256 to 112 marked off, and then we have 104 here in the middle. And as you can see here, there were plenty of opportunities for you to buy somewhere between 1040 or 1350 up to 1350, or somewhere within that range during that time if you didn't get in just right here. Here we have the 130 candle marked off. This is where there were 1848 and it hits R1. Next we have at 2 p.m. where it hits the mid R1 R2 level of 6,340, and there were 2575. That happens here on this candle. And at 2:32 p.m. it hits R2 of 6,1175, and that's where they were worth $35.02. And as you can see here, towards the end of the day, if you'd held on to runners, then you're looking at about $20 a contract here at the end of the day if you held on to any runners. Okay, so another thing to keep in mind is that you get these levels at 9 o'clock a.m. Eastern Time. And using our SPX Index Daily Key Levels Indicator, the best way to utilize it is to use a 2-chart system. The indicator works on 2 different symbols, one being the SPX CBOE index, and the other one being the SPX 500 8 cap. So we recommend that you use this on 2 different charts. The main reason being so at 9 a.m. you will know what the levels are for the CBOE index before the 9:30 open. The reason being is that the way TradingView PineScript works is that even though our indicator already knows what the levels for the SPX CBOE index are at 9 a.m. Are going to be for that day, it cannot show them on the direct SPX CBOE chart until the 9:30 first tick of the open, because the way PineScript works, it will not draw the lines until the first tick. However, the SPX 500 8 cap is open like futures are during the pre-market. So it is able to show the levels for both the SPX 500 while it's on the SPX 500 chart, which are these levels here in this table here for SPX 500. However, you also get a second table here at 9 a.m. Eastern, 30 minutes before the CBOE SPX index open, which gives you a preview of what the SPX main index levels are going to be for that day's session, and that can give you some time to sort of map out a plan depending on what type of option trader you are. I prefer to trade just straight puts, long calls, and long straddles at times. Other traders like to do spreads or iron condors or butterflies or other types of combination option trades. So having the levels at 9 a.m. is very useful before the SPX index open, so you can map out a game plan of what you're trying to do today based on the levels for the session. So that gives you a 30-minute window to sort of formulate a game plan or a pre-planning session. And as you can see here, I've marked off 9 a.m. here. So this is the bar at 9 a.m., 30 minutes before the SPX open. And then this is what you would see at 9 a.m. Before 9 a.m., you would just see the previous day's levels. But at 9 a.m., you would see the levels for this change on the chart. These two tables come up, and then you know what the SPX index levels are as well as the levels for this. Now, there are some people that do trade the SPX 500, CFD. There's some people in Forex, or if you're a prop fund trader who is taking prop challenges, Forex challenges where you're trading index CFDs, then obviously you could use these levels for directly for the SPX 500 CFD if you're trading in one of those type of challenges. However, most people that trade SPX trade the SPX CBOE index, and the only vehicle for trading that is, of course, SPX index options, which is what we've been discussing today. If you have any questions about our indicator, you can certainly either leave a comment, or you can send us an email at daytradinggps@gmail.com. You can also find us on Twitter at daytradinggps. We are running a special right now through the summer where we're offering 50% off monthly or annual subscriptions or lifetime access on the SPX Index Daily Key Levels Indicator. So I invite you to check that out. You can look in the description of the video for the links for that, and also the promo code that's used to get 50% off for that. We also have daily key levels indicators for other types of symbols. So we have a daily key levels indicator for stocks and ETFs. So if you like to trade major stocks like Tesla, Nvidia, or really any of the thousands of stocks that are on the New York Stock Exchange, NASDAQ, over-the-counter stocks, whether you're trading penny stocks or the pre-market gap up, gap down high flyers, or you're trading, major high-tech stocks or Dow stocks or whatever. So that indicator works on all stocks that are on New York Stock Exchange, NASDAQ, American Exchange, and OTC, over the counter. We also have a daily key levels indicator for forex currency pairs and cryptocurrencies, and then another one for futures, like if you trade oil futures, gold futures, Bitcoin futures, NASDAQ futures, S&P 500 futures, Russell 2000, Dow futures, etc. Or you trade the forex CFDs of those indexes. That is our day trading GPS futures CFDs daily key levels indicator. And then if you're the type of trader that likes to trade the NDX, which is the NASDAQ index, we also have the NASDAQ NDX daily key levels indicator, which we'll be making some videos on that in the near future as well. But we also have several other indicators besides that. So we offer a gold indicator suite, which will give you access to all 8 of our indicators. So that's 5 different daily key levels indicators, which does obviously include the SPX one as well, along with 3 other indicators: supply, demand, and equilibrium zones, order block finder, and also our dynamic anchored VWAP KPL navigator. So there's also a link to our gold indicator suite where you can, in the video description, where you can learn more about that. And we also are offering the same 50% off promotion over the summer for our gold indicator suite as well. One thing to keep in mind with our gold indicator suite is that we do offer monthly, annual, and lifetime access for one payment plans. On that, one advantage of getting the lifetime access for one payment plan for the gold indicator suite is not only do you get lifetime access for one payment to all 8 indicators, but you also get the additional benefit of when we come out with additional TradingView indicators in the future, you will also get lifetime access to those at no additional charge. And when we come out with any auto traders for TradingView in the future, you will also be able to get lifetime access to those at no additional charge as well. And we do have an auto trader or initial auto trader that will be coming out later this year. Once that happens, the price for the gold indicator suite will be going up significantly at that time. And then we will also be introducing some additional auto traders for specific market types later as well. So we plan on having, at this point, 3 different auto traders, but we will be releasing the first one probably 6 to 8 weeks from now or so. But at that time, the auto trader will be the most expensive subscription than any of our indicators. It will be significantly more expensive. However, if you want to just buy it on its own or subscribe to it on its own, but if you do go ahead and subscribe to our gold indicator suite, especially with the 50% off promotion, then you will be entitled to receive it at no additional charge. Whereas if you wait till later, the gold indicator suite will be a lot more money, and there will be no more 50% off promotions once the auto trader comes out. And the auto trader, I can tell you, the auto trader by itself will cost more than the gold indicator suite does at this time with no discount. So if you're looking to get a deal, right now is a great time to lock that in, get access to all of our indicators, and then also have lifetime access to all of our auto traders in the future, as well as any new TradingView indicators that we come out with in the future as well. Alright, so I hope you've enjoyed this video, and we thank you for supporting this channel. And again, if you have any questions, you can certainly leave in a comment. I hope that you like and subscribe, like this video and subscribe to our channel, as it definitely does help us out with the YouTube algorithm. And thank you for your time, and wish you prosperity and profitability in your trading. Thank you.